Welcome back. You're watching Stock Watch this week, and join me to unpack your stock-related questions this afternoon is Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send us your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, Zwelakhe. The markets are in such a good mood that the rand is even at 17 rand 90. It's been a while since we've seen that level below 18 rand against the US dollar. Is this calm justifiable and maybe signaling that the fear a week and a half ago was actually overdone?
Look, I think there is no doubt that the reaction last week or a week and a half ago was actually overdone. I think what we are seeing is that more and more evidence seems to point in the direction of U.S. rate cuts, and or at least supportive of a U.S. rate cut, and that would mean that the dollar would lose some of its strength or its support as a result. So the rand has been strengthening indeed, but partly because we're having a weaker dollar.
All right. Well, let's get into some of the questions that we have here on Stockwatch. Let's actually start off with African Rainbow Capital. What's your view on ARC at this point? Of course, we know a number of the investee companies, including Rain and Time Bank, that actually is moving on its growth momentum globally.
Yeah, look, I think as an investment, I mean, I'll probably ask a few questions, but if you look at as a business, the kind of businesses that they've supported, they've probably played a similar role to what Remgrow was years ago and probably decades ago. So they've contributed quite meaningfully to supporting businesses, as you said, examples of Rain. But from investment perspective, I mean, some of these acquisitions, they paid up for them, and we see the share price trading at a substantial discount all the time. And I think it's the market saying that it doesn't believe that the value that is reflected on net asset value is actually a true reflection of what the underlying assets are. So that disconnect, but one side is positive, but from investment perspective, I think there's big question marks there.
How do you actually get to the point of showing the market that actually we are maybe worth much more than what the share price is showing? Are there certain things, low-hanging fruits, that ARC can do, at least in the short to medium term?
Look, I think if they can realize some assets, it will show that the value is realizable. But I think at the moment, what we are seeing is that some of those assets have been in the books at a director's valuation. But if they don't perform, I mean, which is, I think what the market is saying is that the expectation on performance is probably elevated at the director's valuation versus what the market is seeing. So you'd have to unlock value, maybe list some of the sizable assets that would unlock value, or sell some of them so we can see that the value is realizable. At the moment, it's value that is determined by the directors and the acquisition prices, but it is not evident that it is realizable.
All right. I mean, just talking about these investment holding companies, do you still think that there is still significant value in holding some of them?
I think if I step back and look at where South Africa has been and economically, I think there is definitely potential for these investment holdings to deliver value. And now that the economy is hopefully on a positive track, I think the reason is that some of their assets underperformed because they were under enormous pressure from the economic challenges, so including load shedding and a tough consumer environment. And a little bit of an improvement in that area would probably mean that we see these businesses starting to perform. So many of these businesses would probably the holders of this business would probably do a little better as they start getting dividends and they start maybe to realize value through things like listings.
Zwelakhe, there have been some questions on the impact that two themes could have on the banking outlook, because that's been quite good. And of course, you are still seeing the earnings momentum there in the banking sector quite positive. So two themes including the interest rate cuts that are looming, and also the two-pot system. There was actually a question that asked, should banks not be worried about the two-pot system coming to the fore, because that would mean that people will borrow less? And then obviously questions around the impact of reduced interest rates when we know that banks have actually benefited from higher interest rates. What do you make of the banking sector's outlook based on those two themes?
Yeah, look, I think if you look at the trade-offs, and probably if I look at the banks, there's three trade-offs there. So there is the banking volume, so them being able to lend more. Then there's the interest rate, but also the bad debt or the credit loss ratios. So I think the environment that we are going into, yes, you might see that the interest rates are coming down, but it should be more than offset by the improved credit loss ratio, and also that there would be a volume of loans coming through. And I'm saying that in contrast to what you've just said about the two-pot system. I think if people can use some of their money, the 30,000 rand that they can get out of the two-pot limitations, they can actually pay some of their debt and be credit worthy again.
Okay.
Or they could actually fund some of their consumption, and that would be beneficial to the transactional banking, where we do all the transactions and they charge us fees for anything withdrawals and everything. So I don't think it's a bad environment for them. I think the economy is a bigger factor that would drive the performance of the banks, for example.
That's actually quite an interesting point that you make, that some of that money people will pay into their debts, because somebody actually, I think it was JP earlier on this week that was saying, because an economist had said that, you know, this two-pot system, this kind of increased liquidity is just going to be a sugar high. It's not going to last for very long. And actually JP was saying that, you know what, instead of people spending really on consumption, it would be a good idea to actually pay off some of that expensive debt, which of course would then benefit the banks, as you say, Zwelakhe. So quite an interesting one to look at there. Let's go into more questions. Can Supergroup make up lost ground this year? I do understand actually that Supergroup has been under pressure for a while, if I'm not mistaken, after I think we did get positive momentum, I think sometime last year. So the viewer is asking if it can indeed regain some of that ground that it lost.
Yeah, look, Supergroup has got a challenge, and I think part of the challenge is that they've become to some extent, a kind of conglomerate that goes and buys other businesses, and hope that they can grow their earnings that way. And in fact, one of the issues we had with them was the remuneration model that incentivizes them on growth and not so much on the shareholder value creation. And I think if you look at where they are in terms of their operations, I mean, that in time business is being impaired in Europe. They paid up for that business, and you're having some of the coal contracts struggling here in South Africa, and the environment hasn't been great for the auto sales. So they have been caught up to some extent on the both on the dealerships, on the logistics, and in the European assets. So I think that it might be time for them to really look at whether they've got the right mix of businesses and whether certain businesses are actually worthy of being in their group. Because I mean, they're going into this now, downturn. I don't know how many times they've had, but in the last 20 years I've been in the market, I think I've seen 2 or 3 of those downturns for them.
Yeah. Well, I mean, actually, just pulling a thread from the comment that you made about auto sales, that we have seen some pressure on that front. Would you actually be looking at any of the automotive exposed counters on the JSE, including Motus and Combined Motor Holdings, considering the fact that now the narrative of lower interest rates has started to gain some momentum?
I would. I certainly think that lower interest rates have a favorable impact on these stocks. And I think that if one looks at the timing, and you have to be conscious of the 2 timings, the market might start reacting on those stocks as soon as we know that rates are being cut in South Africa.
Yeah.
The actual performance might actually take a while to come through, because you're going to take probably 12 months from the first rate cut to start seeing the momentum coming through in more vehicle sales and in better performance of the dealerships. So I would think that where they are, the valuations are suggesting that there is an opportunity, and that would actually deliver probably in 12 months' time in terms of their fundamental performance.
Well, talking about opportunity, there is a viewer that's maybe seeking for opportunity in EOH as well. Like, I don't know if you still look at that one, because a lot of people have basically captured the narrative that once bitten, twice shy. So the viewers asking, EOH share price increased, and in the last month it increased quite a bit. I'm actually seeing there from the lows that we did have in August, it's actually early August has been shooting up. Basically, the viewer, because at this point your age is at about R1.76, the viewer is asking, if I hold some more, can it pass R3.37 average price? That's very specific. But of course, I guess it pertains to when the viewer bought it. Yeah, R1.79 to R3.37 in the next 4 years. Do you think that, it could, the momentum could increase to that level?
The first thing is that the viewer started with the share price. They're looking at the share price instead of the performance, and they're hoping that the share price performs. But the driver of that performance, and I mean, we looked at EOH in detail probably 3 years ago and decided not to invest in it. And it had come from 20 Rand, it was probably 5 Rand. The issue here is the fundamental performance. EOH has seen quite a substantial damage to its reputation, but also where they still have contracts, they seem to be battling to make decent money. Their Yoko division, that division is still struggling. So there is a lot of work that they have to do. If they can get it right, and I'll say if they can get it right, it'll be probably a business whose valuation shoots the lights out. But there is a lot of risk, and they've got a CEO who's determined and who's worked hard, but there's still quite a bit of risk. So I wouldn't touch EOH at this stage. It might be cheap, but it's definitely not for me.
All right. Well, another one, Metrofile. I don't know how closely you look at this one as well. The viewer says, held on for nearly 2 years. Will the share ever get back to R3? Metrofile currently at R2.35. Do you think that it could push through to R3?
It's hard to say if it could push through, and it might. I mean, but if I just look at their old business,
because they've had quite a restructuring, remodeling,
and you know that's the impact of technology. They used to be the guys that used to come to offices, collect boxes of
I remember those boxes
and go store them. And the world has become different. and the data centers have become their competition to some extent. They've had to morph into that kind of business. But even then, I still think that they have some proving to do. I mean, the entrance of uh, companies like AWS
Yeah.
in South Africa, it just enables smaller competitors to challenge Metrofile, even as they try to transform into the storage and archiving in an electronic world. I do think that yeah, they'll remain challenged for some time. I'm not optimistic about it, but if they can get it right, and maybe they'll make an acquisition and consolidate the sector, it might help them. But I'm not seeing that at the moment.
All right. Well, what are you seeing at the moment? What is your stock pick for today?
I thought it was a secret. I'm not allowed to talk about it.
How come?
So I went for athleisure stock, Lululemon,
Okay.
and the business has taken a bit of strain. I mean, the share price has taken a bit of strain more recently as the performance has been below expectations. So they had a post-COVID sugar high, and when the numbers deflated in North America, they came under pressure. But I think the growth in their international business, China and other markets, will probably support long-term value. And it's a very good business, very well run, good returns. So that'll be my pick for today.
All right. Well, thank you so much for your time and for your analysis today, Zwelakhe. Much appreciated. That was Zwelakhe Mnguni from Benguela Global Fund Managers.